It seems that the United States is gradually losing control over Mexico, and the country is almost entirely shifting into China's sphere of influence. This is no coincidence. The consequences of a series of U.S. tariffs on Mexican goods imposed under Donald Trump's administration have turned out to be far more serious than analysts in Washington anticipated. According to several reputable outlets, including the Wall Street Journal and the Financial Times, Chinese authorities immediately intensified their economic initiatives to take advantage of the emerging vacuum and strengthen their position in Latin America. Anonymous insiders from Mexico's Ministry of Economy confirmed that the damage from U.S. tariffs has exceeded all forecasts, forcing the country to seek new strategic partnerships. Just a year ago, Mexico independently imposed high tariffs on Chinese automobiles to protect its domestic market. But now, after several major proposals from Beijing, Mexico City is considering suspending these restrictions. In return, China is offering access to rare earth metals, which are critical for the production of electronics, electric vehicles, and defense systems. In addition, discussions are underway about creating joint industrial zones and participating in major infrastructure projects in Mexico, including the modernization of Pacific coast ports, the construction of new logistics hubs, and investments in the energy sector. Experts note that this is not merely economic cooperation, but a strategic game. China is gaining an opportunity to establish a foothold in a territory historically considered part of the U.S. sphere of influence. According to Mexico News Daily, Mexico has already seized the moment to increase its exports to the U.S. market while simultaneously expanding cooperation with Asian partners. This combination of strategic autonomy and economic pragmatism makes Mexico an increasingly significant player on the global stage. Many analysts describe what is happening as an economic coup. The most important part is that Washington understands this and is afraid. That is why the Trump administration, in an attempt to keep Mexico within its orbit, took a step previously thought impossible. According to Reuters and The Hill, in an effort to prevent a complete breakdown in relations, the White House granted a 90-day delay in the enforcement of new tariffs to give Mexico time to adapt and return to negotiations. However, time has run out. What Washington had hoped for never materialized. Neither Mexican industry, nor the business lobby, nor the ruling elite could ignore the fact that the United States was no longer a stable and predictable partner. Tariffs, threats, the revision of the USMCA agreement, and discussions about imposing additional taxes on cross-border trade. All of this destroyed the trust that had been built over decades. It was at this moment that China made a decisive move. Beijing did not simply offer favorable contracts. It proposed a long-term model of interdependence in which Mexico would no longer be a junior partner, as it was with Washington, but a key hub in a new global supply architecture. Chinese companies began investing heavily in regions that had been marginalized for decades. According to El Financiero, in just the past 6 months, Chinese credit lines for the development of road and port infrastructure in Mexico's southern states exceeded $11.4 billion. Unlike U.S. programs through the IMF and the World Bank, Chinese investments come without political conditions. They do not require the privatization of state assets or the deregulation of markets. Mexico received funding free from ideological strings, and that proved to be critically important. American analysts are already calling this a silent loss of an ally. It is not a crisis or a rupture, it is a shift. Slow, subtle, but irreversible. The White House tried to halt the process with an automotive industry stimulus plan, expanded credit lines, and rhetorical statements about the inviolability of the North American economic space. But while Washington talked, Beijing acted. Chinese companies are building roads, terminals, power stations, communication lines, and raw material processing centers. They are creating jobs. They are embedded in every detail of the future. So by the time the 90-day pause ended, Mexico was already operating in a different political field. And this has become a pivotal moment for Mexico's internal political debate. For the first time in a long while, the government allowed itself to discuss foreign policy autonomy not as a theoretical concept, but as a practical course of action. According to the think tank CIDE, the idea of balancing influences is gaining traction within Mexico's elite. maintaining economic ties with the United States while simultaneously developing strategic partnerships with China, India, and the countries of Southeast Asia. This is a fundamentally new model. In the 20th century, Mexico was forced to accept Washington's terms due to economic dependence. But today, in the era of globalized supply chains, Mexico City can choose. And its choice is determined not by pressure, but by benefit, infrastructure, and future technologies. China offers what the United States does not: participation in the production cycle of the future, rather than the role of a supplier of cheap labor. Of particular importance is the Trans-Isthmus Corridor project. This is a massive infrastructure initiative connecting the Pacific Ocean and the Gulf of Mexico through the southern states. Officially, Mexico presents it as an alternative international trade route that can ease congestion in the Panama Canal. But experts understand that it represents much more. If the corridor is completed and fully operational, China will gain a direct, independent, and fast route for delivering goods to the markets of North and South America. And now, according to leaks from Mexico News Daily, Chinese companies are among those participating in the development of industrial clusters along the corridor. A chain of ports, processing centers, industrial parks, and logistics hubs will emerge. This is the economy of the future, embedded in the geography of Mexico, not the United States. Washington sees this as a strategic challenge. Analysts from the Rand Corporation and the Center for Strategic and International Studies openly state that if China establishes itself in southern Mexico, it will lead to a reorientation of the entire region. Beijing's presence in supply, transport, energy, and port infrastructure means control over the flow of goods and capital, and control over flows means control over political decisions. In such a scenario, any tariff threats or pressure attempts from the United States will lose their effectiveness. Meanwhile, China is not limiting itself to industry alone. In the technology sphere, Beijing is betting on digital infrastructure. Despite pressure from the United States, Huawei is strengthening its presence in Mexico. Telecommunications equipment, cloud services, and research centers are all expanding. At the same time, joint programs for training IT specialists, engineers, and operators of robotic manufacturing systems are being launched. This means that within 8 to 12 years, key positions in industry and logistics will be held by specialists trained under Chinese methodologies and integrated into Chinese technological ecosystems. This is generational influence, far stronger than any trade agreement. And most importantly, unlike the United States, China does not try to impose a political model or ideology on Mexico. In Latin American political circles, this is called pragmatic sovereignty. For a region where the memory of US interventions in politics, regime changes, opposition financing, and coups remains vivid, this sounds far more appealing. It is a model of cooperation without open dependence, but with mutual benefit and symmetrical recognition. As a result, a new geopolitical reality is emerging. The United States remains a powerful player on the continent, but its influence is no longer absolute. Mexico, as the third largest economy in Latin America and one of the key manufacturers in global supply chains, is transitioning from the role of junior partner to that of a central hub. This is not a revolution but a quiet process that has already changed the architecture of relations in the Western Hemisphere. Washington can still try to keep Mexico within its orbit, but its tools are diminishing, and each new move looks more like a reaction than a strategy. Beijing, on the other hand, acts consistently, calmly, and with long-term purpose. And in this game, time is not on America's side.